Welcome to Buy, Hold, Sell. I'm Ben Clark, and today we're looking through some quality stocks that are trying to grow into offshore markets and getting some real results. We've got Andrew Mitchell from Ophir and Junbei Liu from Tribeca to go through them with us. Andrew, I'll start with you. Magellan, they had a ripping result, although they did tap the market for a raising. Buy, hold, or sell?
For us, I'll say a sell. Look, this is trading on a valuation, a plus 20 to 25 times forward price to earnings ratio, and the market is expecting in perpetuity that it's going to keep raising funds, and the performance fees, importantly, are going to sustain. We know in this industry they can be fleeting, and you've seen what happens to Pendle. It trades now on a 13 times or so multiple when those performance fees go away. So the downside risk, I think, with Magellan is a lot higher than the upside risk, so it's a sell from us. But they've done very well, it's a good business.
I've got to agree with that. Junbei, have you got a different opinion? Buy, hold, or sell?
I've got a hold to slightly positive. So look, Magellan, back your winners. This is the only fund manager, listed fund manager, that's actually winning money, aside from Pinnacle on the smaller end. You back them because the flow were enormous, and they just raised money for a couple of new products. Be sure that they will fill those products. And yes, performance fees are going to be very difficult to cycle next year, but they're winning money, and that at very, very good margins. So to me, stick with your winners. Don't invest money with the managers actually losing money, and that you know what a bad performance does to a culture. It's just going through that negative cycle. So stick with the winners.
Okay. Macquarie's been a winner and a great money manager over the years. It's actually raising capital at the moment. Would you be looking at the raising? Is it a buy?
Look, to me, Macquarie is probably a hold again to the positive side. Yeah. I do believe this is one good financial company or bank that give you that leverage to lower interest rates. And we all know the interest rates going lower around the world, and that company has very good leverage into it. And they're raising money, of course. Does that mean they, increase their war chest? Maybe they will have M&A, and that will be earnings accretive.
Okay, Andrew, what a different view on Macquarie? I know you normally look at the smaller sort of end of the market. But they have been a great performer.
Look, it's not my area of expertise, but when I see a company raising $1 billion to, I guess, build a war chest and build its regulatory capital that it may need, for me that seems pretty opportunistic, and I think the board and management, my guess would be that they think its valuation's pretty full at the moment, and they're going to take advantage of that and raise some more capital, more loot.
Yep. Altium, I can't remember them doing a raising, and they had a ripping result in August. Buy, hold, or sell?
It's a hold from us. Look, it was from us. It actually sort of missed the result, but the outlook was fantastic. The market's factoring in that 2025 target of US $500 million. We owned it for a long time in the past. We don't own it now. We're waiting and seeing more confirmation that it's on track to hit that $500 million target.
Okay. Junbei, I like companies that set long-term goals for themselves. Is this one a buy?
Look, this one is a buy for me. By far, I think this is the best tech company around in the Australian market. It offers a very strong growth, and as we talked to before, the growth outlook. And it also doesn't cost you that DS when compared to the likes such as the WiseTech, for example. And this company, in terms of accounting treatment of some of its development costs, it's one of the most conservative when you compare to other tech companies in terms of how they capitalize onto balance sheet and the like. So to me, it's a very high quality company. I stick with that.
Yeah. Okay. Now I'll ask you to bring one in. A company that's growing offshore, high quality. What have you got for us?
Look, this one is a little bit boring. It's going to be CSL. It is the name that has delivered for decades. The earnings growth momentum continue to be very, very strong. Just as we thought, for the last 5 years, almost every year we thought that's the end of the growth, and they managed to do another double digit. And this year they gave an enormous earnings guidance outlook. And to us, it's a very high quality companies that will offer very defensive growth profile.
It's been a great performer. And Andrew, have you got one for us?
Afterpay. Look, Afterpay has been one that served us at Ophir for a long time very well, and we are still right behind it. That result last week was a phenomenal result. It beat on every line. You saw the UK showed really good growth, as good as the US. And they're signing on more retailers on the US, another couple of big retailers in the US. So We think they're on a wave. They're riding the millennial and they're shunning away the credit card. They're using the buy now, pay later space, and they're going to continue to ride this wave around the world.
That's great. It can be well worth looking for companies that are fishing in much bigger ponds.